Friends, I'm live again now. Please confirm that you all can see me. Let me check the YouTube. Abhilash, now I gave a break, so I stopped the streaming. Now once I came back and had clicked back on stream, what will happen? YouTube, the link will be expired in that case, no? I didn't get you. It's in Caster it is enabled. See what happened is 8 o'clock I give a break, right? So I go to OBS and I stop streaming. So now I have restarted my streaming again. It's running in my platform, SCMPE live it is happening. But what about YouTube? Do we have to do something again in that, or it should normally start running live in the YouTube also? Just check, no? Okay, I'm keeping the phone, okay? Follow me. Friends, just wait, I'm just putting it on YouTube also. Being the first day, I'll go very slow. So today the challenge is not to cover much syllabus. The challenge is that we need to create a good communication channel between both of us. Good communication channel. Okay, I'm live on YouTube also. Alright friends, I'm live on YouTube also. So let's start off in that case. Okay. Okay, let us start off friends. Let me just confirm in the WhatsApp group also. Okay. Alright friends, so let us start. Harsha, you just have to click on Tarun Jagdish. Just search Tarun Jagdish, or should I put the link? Just search Tarun Jagdish, you will get the. Let me try getting the link if some students are not getting it. Just 1 minute, I just paste the link. So after that, we can start off with the next session. Got it, okay, alright. So everyone is now set. Shall we start off with today's session with this now, friends? Let us start off with the next session. Now you write down in your book, I think we learned two concepts so far. We learned the structure of a factory and linkage between accounting and costing. Now you write down concept number 3, that will be marginal costing. Let us start from the base, okay? Inside marginal costing, you write down the introduction. Friends, as compared to absorption costing, marginal costing is a place where we segregate the entire cost into two parts. One will be a variable cost and the other one will be a fixed cost. By doing so, we can do better analysis of the whole business. We can also get to know much more important information which we never get from absorption costing. So in my opinion, since I am also practicing heavily in the area of cost management in the industry, I have always found marginal costing more useful than absorption costing. Okay, so I just write down over here in marginal costing, cost is segregated into fixed cost and variable cost, based on which decisions are taken. Okay, can you write down this in your books now, friends? Alright friends, everybody is clear with this. Now we'll go in depth of the concepts coming inside this. Everyone write down subconcept number one. Subconcept number one, contribution. Subconcept number one, contribution. Okay. In the earlier example, we had a selling price of 100 rupees and I believe we had a variable cost of 60 rupees. Hence we got the contribution as how much? Did we get the answer as 40 rupees over here? Am I right? So can you tell me what is the formula for contribution? Contribution is nothing but it is going to be selling price minus what? Selling price minus variable cost. Okay. So what is the logic of this contribution? It means every one masala dosa I sell, I get 40 rupees in hand, which I will use to cover up my fixed cost. Okay. So I'll write down over here. Okay. For every one masala dosa I sell, I get 40 rupees margin in my hand, which will be initially used to cover up fixed cost and will later on contribute to my profits. Okay, or maybe I'll not use the word cover up, I'll use the word contribute to fixed cost. So you will understand why we use the word contribution. Okay, just type this word and you can write down contribute to fixed cost, and subsequently it contributes to what? Profit. And that is the reason we call it as contribution. Can you write down this in your books now, all of you? Alright friends, I believe you have all put up till here in your books, and I hope you are clear with the concept of contribution right now. Okay, fine. Let me go to the next one now. Okay, next one, subconcept number 2, PV ratio. All comfortable friends, please chat and let me know if everything is comfortable. Okay, PV ratio. PV ratio, the formula is contribution, okay, divided by sales. Okay, or in our example, how much was the contribution? Was it 40 rupees? Divided by what is the sales that we are having, 100 rupees. So am I getting the answer as 40 percentage? What is the logic of this 40 percentage? The logic is very simple. 40% means for every 100 rupees of sales which I do, 40 rupees will be the contribution which will initially contribute towards fixed cost and subsequently contribute towards profit. So for every 100 rupee of sales which I do, I get 40 rupees in hand, which will initially contribute to fixed cost and subsequently it will contribute to what? Profits. Can you write down this in your books now, all of you? Friends, I believe you are clear with PV ratio also. So we learned what is the logic of contribution, we learned what is the logic of PV ratio. Now I go to subconcept number 3, where I will write down break even point. Friends, BEP we can learn in multiple formats. One, we can learn BEP in rupees, or I'll start with units. In units, I can also find out BEP in rupees, or I can find out BEP in percentage. Can you draw this chart in your books now, all of you? Alright, shall we do it one by one now? I'll start with BEP in units. Okay. First, I'll tell you the logic of the word break-even point. Friends, break-even point, the definition what you learned in your inter is not enough. There you learned it is a point of no profit, no loss. Am I right? This part is okay. But apart from this, we need to understand few more things. It means above this point, you should make profit. Above this point, we make profit. This is important. And below this point, we make loss. That is also very, very important. BEP in unit, first I'll give you the formula, then I'll tell you the logic. The formula is fixed cost divided by contribution per unit. Here we have a fixed cost of 3 lakh rupees divided by we have a contribution per unit of 40 rupees per unit. Am I right? Can you tell me what is 3 lakh divided by 40? Do I get the answer as 7,500 units over here? Okay. Can you please write down this in your books now? Alright friends, have you all put up till... Alright friends, have you all put up till here in your books now? Fine. Can I go to the logic of this one? Friends, let us find out the profit or loss at 7,500 units. Okay? 7,500 units into, you are getting 40 rupees as contribution. Is that equal to 3 lakhs? This is turning out to be your total contribution. Am I right? What is the total fixed cost that we are having over here? Is that also 3 lakhs? So what is my profit or loss over here? It turns out to be 0. Hence, 7,500 is what I call it as the break-even point. Can you write down this in your books now? Fine friends, have you all put up till here? If I draw a chart, the chart will go like this. This is the point which will be called as BEP, 7,500. If you sell from 0 to 7,500, you will be at a loss. Anything above 7,500, you will go at a profit. Can you write down this in your books now? Alright friends, have you all put up till here in your books now? So this is the logic of the word break-even point. So at 7,500 dosas, Sharona Bhavan will reach its break-even point. How, if they start selling more than this, how much ever more they sell, that will contribute to their profits. Okay? Now, everybody is clear with break-even point in units. Let's write down the next one now. BEP in rupees. Friends, this can be found out using two formulas. First one is fixed cost divided by PV ratio. Other one is BEP in units. We can multiply with the selling price. In my example, I think we were selling 1 lakh dosas, right? So from 7,500 to 1 lakh will be the profit. You can put this chart in your books. Okay, I'll come back over here now. So fixed cost divided by PV ratio when we are doing, okay, what we will do is, how much is the fixed cost that we are having over here? 3 lakhs divided by 40%. Friends, I'll go very slow today because I don't want any kind of confusions later on. We get the answer as how much over here? We get the answer as 7 lakh 50,000. Okay, or I can get the same answer over here. I got the answer as 7,500 units into what is the selling price. It is turning out to be 100 rupees. Like this also you get the answer as how much? 7 lakh 50,000. Can you draw this chart in your books now? Alright friends, everybody has put up till here in your books. I believe everything is smooth. Rahul, no, it is fixed cost by contribution per unit. Did I write it down wrong way somewhere? No, it is contribution per unit. It's written very clearly over here. Okay, fine. So everyone is clear with break-even point in rupees also. Okay. Now I'll draw the chart once again. Here you get 7.5 lakhs. My total sale value is how much? 100 lakhs. Am I right? So 0 to 7.5 lakhs I will run at a loss. At this point will be my BEP. Above this is going to be my profit. Can you draw this in your books now? Fine friends, everybody is clear with this part also. Can I go to the next one now? Okay, so we have got the BEP logic of rupees also. The last one is BEP in percentage. This can be found using three formulas. First one is BEP in units divided by actual sale in unit. Second one is BEP in rupees divided by actual sale in rupee. The last one will be fixed cost divided by contribution. Let's do it one by one. Is this 7,500 divided by 1 lakh? So I get the answer as 7.5%. Here it is 7 lakh 50,000 divided by 100 lakhs. Is that also turning out to be 7.5%? Total fixed cost is how much? 3 lakh. What is the total contribution that I have got? Did I get the total contribution as 40 lakhs earlier? So 3 by 40 also if I do, I will get the answer as 7.5%. Can you draw this in your books now? Alright friends, everybody is clear with break-even point in percentage also. So I'll tell you the logic of this break-even point in percentage. Friends, total is going to be 100 percentage. In this, 7.5% is break-even point percentage. It means, okay, the 7.5% of sales will contribute to fixed cost. Okay, and what is the remaining coming over here? 92.5%, or it means 92.5% of sale will contribute to profits. Can you draw this chart? I'll show you with one more example after this. Alright friends, everybody is written down till here. Now let us take the total turnover. What is the total turnover that we are having in this case? Is it 100 lakh rupees? Correct? Now tell me how much is 7.5% of 100 lakh rupees? Is it 7.5 lakhs? 7.5 is contributing towards fixed cost. That is how you reach the break-even point. What is the balance 92.5 percentage? Is that 92.5 lakh rupees? This is doing what? This is contributing towards what? Towards profits. And similarly, we have in total 1 lakh units. Out of 1 lakh units, 7,500 units is contributing towards what? Towards fixed cost. 92,500 units is contributing towards what? Towards profits. Can you draw this chart also in your books now? Alright friends, have you all put up till here in your books now? Okay. So I hope you understood the meaning of break-even point in percentage now. 7.5% means it is 7.5% of sales will help you to achieve the break-even point, or that is the point at which your fixed cost will be covered up. Okay. I believe everybody is clear so far. So we are done with break-even point also. We learned what is contribution. We learned what is PV ratio. We learned what is break-even point. Now we will learn the next thing, margin of safety. Just like break-even point, margin of safety can also be found out in units. Margin of safety can be found out in rupees, and margin of safety can be found out in percentage also. Can you draw this chart in your books now? Fine friends, everybody is clear with this part. Let's do it one by one now. We're talking about margin of safety in units. This can be found out using the formula. Three formulas are there which I can use, or I can use two formulas over here. The first one is actual sale in units, okay, minus break-even sale in units. This is one method that I can use. And the second formula that I can use would be total profit divided by contribution per unit. Okay. Now tell me, what is the actual sales in units? Is it turning out to be 1 lakh minus 7,500? Do I get the answer as 92,500? What is the overall profit that we got? Was it 37 lakhs divided by 40 rupees per unit? Can you tell me what is 37 lakh divided by 40 rupees per unit? That also turns out to be 92,500. Can you write down this in your books now, friends? Alright friends, if I am going slow or fast, let me know, okay? I'll adjust it accordingly. Alright friends, everybody has got this answer in your books, okay? So, the logic I will explain to you now. The logic is very simple. Earlier, I drew a chart, okay, where up to 7,500 units, what are we doing? We are contributing towards fixed cost. But the balance 92,500 units, we are contributing towards what? Contributing towards profit. Okay. Hence, this is called as the break-even point, and this is called as what? Margin of safety. Anything over and above the break-even point is what we call it as margin of safety. Can you write down this in your books now? Alright friends, have you put up till here in your books? Okay. Now this way we can also find out margin of safety in rupees now. This also can be found out using two methods. Actual sales in rupees minus break-even sale in rupees. This is method 1. Okay. Or the second method is going to be profit divided by PV ratio. What is the actual sales in rupees? That is 100 lakh minus 7.5. That would turn out to be 92.5. Profit, I believe we got the profit as 37 lakh divided by 40 percentage. You get the answer as the same 92.50 lakhs. Can you draw this chart in your books now? Alright friends, have you all put up till here in your books? Now just like the chart I drew earlier, here I'll draw a chart in rupees now. From 0 to 7.50 lakhs, we are doing what? We are contributing towards fixed cost. Beyond this, the 92.5 lakhs, we are contributing towards what? Profit. Hence, this is called as the break-even point, and this one is called as the margin of safety. Can you write down this also in your books now? Alright friends, have you put up till here in your books now? Okay, can I go to the next part now friends? The last one is margin of safety in percentage. This can be found using three methods. One is MOS in units divided by actual sale in units. MOS in rupees divided by actual sales in rupees, and now it will be profit divided by contribution. Friends, what is MOS in units? 92,500 divided by 1 lakh. Do I get the answer as 92.5 percentage? 92.50 lakh divided by 100 lakh will also give you the same answer. How much is the profit? We got 37 lakh divided by the contribution was 40 lakh. This will also give you 92.5 percentage. Can you put this in your books now? Fine friends, everybody is clear with this part. Can I go to the next one now? So if you see the logic of this, it is the same as I gave you earlier. 100% is the total sales. 7.5% is contributing towards fixed cost, but the balance 92.5% is contributing towards profits. Can you draw this chart also in your books and finish it off, friends? All right, friends, everybody is clear with this part. So, friends, we are done with margin of safety also. Okay. So, I think we are done with the major concepts as far as the marginal costing is concerned. Let me give you the overview of the marginal costing basics that we have just learned now. We have learned what is the contribution. We learned what is PV ratio. We learned what is break-even point, and we learned what is margin of safety. Alright, friends, what is the formula for contribution? Selling price minus variable cost, contribution divided by sales. This you can get it in units, in rupees, and in percentage. This also can come in unit, rupees, percentage. Units will be fixed cost divided by contribution per unit, fixed cost divided by PV ratio, fixed cost divided by total contribution. Here it is going to be profit divided by contribution per unit, profit divided by PV ratio, and profit divided by contribution. Can you put this overview in your books and finish it off, friends? Alright, friends, I believe you have put up till here also. I believe all of you were comfortable with this now. Okay. Now, since you are done with this, we are done with the first session of SCMPE, and this was all the basics, something what you have already learned in your IPCC. But once you get the basics and once the basics are very much clear, it will be very easy for you to go to the next level. Now, friends, shall we pack up our session? I would pack up my session with a very simple, powerful lesson which has inspired me a lot and which I believe would inspire you also. Whose name have I written on the board? Muhammad Ali. Who is Muhammad Ali? He is one of the greatest boxers that the world has ever seen. Do you know that as a kid, being a black, he was always discriminated and he was always abused as a child. One fine day, a group of senior white kids, around 3 or 4, grabbed him in the corner and they were about to beat him. Now, to protect himself, the only option left in front of Muhammad Ali was to take a wooden log kept next to him and he started hitting those people left and right and he ran away from there. It is said that Muhammad Ali started fighting on that date. After that, he never stopped fighting. He joined professional boxing career at the age of 16, and after 7 years of vigorous workouts and intensive practices, finally Muhammad Ali went to the finals of the heavyweight championship. Once he reached the finals of the heavyweight championship, at that point, many news reporters came and interviewed him. They asked him, "Are you nervous for tomorrow's match?" At that point, Muhammad Ali gave back a blunt reply. He didn't give it to the news reporters. He took the camera in front of his face, started speaking directly to the opponent, and told them, "Come and fight me tomorrow, I will break you down." Next day, the hall was full of people waiting to watch Muhammad Ali come and fight in the ring. You should see the way he comes to the ring. He will not normally walk and come. He will jump left and right and he will be all excited. He will keep on screaming, "I am the greatest of all times. I am the greatest of all times." And that is how he enters the ring. Once he enters the ring, he will not keep quiet. He will keep on jumping here and there. He will start looking into the eyes of the opponent and he will start speaking to him. He will start telling him, "Come and fight me, I will break you down." After so much of talking, finally the match started, and you should see the way Muhammad Ali actually fought. Initial 4 rounds, he was teasing the opponent. The opposite opponent was trying to hit him, but he was so quick in his responses that he was just moving his head away and they just couldn't hit him. You can check this defense mechanism of Muhammad Ali. He not only teased the final heavyweight champion, he used to tease a lot of people like that. Fifth round, he started hitting back left and right. By the time the seventh round got over, Muhammad Ali won by way of knockout. What do you mean by knockout? The opponent fell down, they counted 10, he couldn't get up. And from that day onwards, Muhammad Ali became the greatest boxers of all times. Later on, they started asking him, what is the secret to your success? For which Muhammad Ali gave two important reasons as because of which he is very much successful. And I believe these two lessons are very, very important for all of you also to succeed. Lesson number one is what he calls it as believe in yourself. Lesson number two is start counting when it starts paining. These are the two power lessons of Muhammad Ali. Lesson number one, he admitted later on in his career that when he's sitting in the changing room, he's very, very scared to come out and fight. Now once he's coming out, he's scared. But if the world sees that he's afraid, they will definitely crumble him down. So in order to hide his fear, he used to start jumping left and right, and he went on screaming, I am the greatest of all times, I am the greatest of all times. This was done mainly to first create belief in himself that yes, I can do it. And the moment he gets belief, the people around him will also start believing in him. He will understand at that time that he is going to win this match because the opponent has lost in the mind. If the opponent loses in the mind, then it becomes very difficult for him to succeed. Friends, that is how Muhammad Ali wins all the matches. Because he believes in himself, that is the only way the world would believe in him. The second question what everyone asked him was, how many sit-ups do you take every day? For which Muhammad Ali gave a reply, I do not count my sit-ups. I do not count my sit-ups. I start counting only when it starts paining because that is what really matters. So friends, normally if a person does 50 sit-ups, he's exhausted and he's stopping his sit-ups over there. Muhammad Ali will start 51 from there. And now you just imagine the impact of that. When others break down, he's continuing to do. That is where he actually becomes a successful person. So friends, these are my messages to all of you. Now let's analyze this from CA perspective. Okay. Message number one, believe in yourself. Friends, how many of you are 100% sure, yes, this is the attempt, I will become a chartered accountant? Most of you will have a doubt inside and you keep asking this question to yourself, will I become a CA? Friends, understand one thing, unless you believe in yourself, institute will never believe in you. So if ever you come with a thought in your mind, will I become a CA? Immediately change it and tell to yourself, I will become a CA, I am a chartered accountant. Make yourself believe as a CA. Only then you will study as a CA, only then you will write your exams as a CA, only then you will qualify and you will become a chartered accountant. If you don't have belief in yourself, how will the world believe in you? Only if you believe in yourself will the world also believe in you. So please start believing in yourself. You can do anything in this world. CA is just one examination. There are much bigger things in life what you will do once you complete this course. And lesson number two, start counting when it starts paining. When everyone breaks down, at that time, if you stand up, that is what really matters. Everyone does the same thing, you do the same thing, you have no value. Everyone studies for 10 hours, you study for 10 hours, no value. Everyone studies for 10, you study for 11. That one extra hour is what gives you the leading advantage, friends. So, first thing, believe in yourself. And second thing, when others break down, you stand up. Start counting when it starts paining and believe in yourself. Thank you so much, friends. Have a nice time ahead. See you on Saturday morning at 6:30. Tomorrow there is no class. Saturday morning, 6:30. Have a nice time ahead.